Tesla stock was all the rage in 2019, with the stock losing nearly half its value in the span of a few short months. And everyone on Wall Street during this time was extremely bearish on this company, saying how they are headed for bankruptcy. And then there was me, a tiny little investor, going against the grain and publicly stating that I was buying Tesla stock at that time. Well, fast forward to today, and Tesla has soared to over $750 per share after cooling off from hitting over $950 per share just a couple of months ago. And guess what? I'm still holding those shares that I bought back in 2019, and as you can imagine, this is one of my best performing stocks in my portfolio as a result. Now, as a Tesla shareholder and a Tesla bull, I believe the future for this company has never looked so bright, never looked so certain, and as a result, I think that $1,000 per share with this stock is not too far off. So in this video, I want to cover a couple key things surrounding Tesla here that has not only propelled the stock to near its all-time highs once again, but has pretty much given it fuel to once again run to close to, or this time even past, $1,000 per share. I will also share with you guys if I've bought more Tesla stock recently, and if I plan to buy any more at these current prices, so make sure you stick around to the end of the video to find out. But either way, let's get started. Smash that like button down below for another Tesla video, and let's get into it. So like I said, almost every analyst under the sun was bearish on Tesla in 2019, and this includes Goldman Sachs, who very proudly set their target on Tesla to $150 per share last year, lowering it from their previous target at the time of $200 per share. And this happened right in the middle of all the bad news around the company, and quite honestly, it was the cool thing to do on Wall Street. Well, funny enough, Tesla did not hit their target, but it did find a bottom around $175 per share, and since then, investors who sold around those prices have been kicking themselves for doing so. Now, just this past week, we got this headline here that says, Goldman Sachs is a believer in Tesla. And this comes just after 1 year from them setting their price target of $150 per share. So just keep that in mind. They've now come out to reveal that Tesla may actually succeed. And their reasoning is that they believe the company has a significant product lead in electric vehicles. And this is a market where they expect long-term secular growth. Well, the question I have for them is, was this not already known a few months ago when you guys lowered the price targets and had concerns around the company? In my opinion, this was known. Fundamentally, in my opinion, everything that was expected back in 2019, looking forward to today, has come true. And investors like myself saw that vision and bought into the stock when prices were extremely suppressed. Now, companies like Goldman Sachs realize this after the stock has already climbed from a low of $175 per share to $750 per share. And all I can say is that I guess someone missed out on some big gains here. They also go on to say that they like that Tesla's product is a leader in the market and that they have the early mover advantage. Again, these are things we knew back in 2019. Then they go on to say that the Model Y will help Tesla to have more traction in the SUV market, with a price set to be lower than Model X. Once again, this was well known in 2019. Finally, in their note here, they say that they like the revenue growth of Tesla, and this is a big reason for them turning bullish on the stock. Guys, once again, this is nothing new. Tesla has been having incredible growth numbers over the last few years, and this was all clear in 2019 to most investors, especially those who took the time to understand the business and the market. Anyways, the bottom line is that Goldman has come out and publicly set a new price target on Tesla of $864 per share, and this has helped the stock have a phenomenal week overall. Analysts are sometimes very slow to react. They don't typically like going against the main herd because if they're wrong, it's going to look really bad on them. So they typically stick together here. And as one starts upgrading, the others typically follow suit as well. But a lot of times in situations like this, for example, they miss out on huge gains because they don't want to go against the herd. In my opinion, another stock that's going through something very similar right now is Uber. And I think that right now the cool thing to do is really be against Uber, criticize them on not having profits, and just not having any sort of vision in the stock. But I'm sure a couple years from now that analysts are going to turn around, they're going to say, oh wow, look at Uber, they're the segment leader in ride sharing is the future. These are all things that are trending in the positive direction going forward. So you know what, we're bullish on Uber right now. I have a feeling that's going to happen, but let's wait and see if it does. Now the second piece of good news that came out helped us fuel this rally in Tesla even more. We know that the Tesla Giga Factory in China is now open. And in the month of March, we saw Tesla's car registrations in China surge as they opened the factory back up. Remember, China was going through the global issue for most of January and February, so March had a lot of, quote, pent-up demand, and I mean a lot. Registrations in March surged 450% month over month, which is some astronomical growth. Now, in actual figures, this meant that Tesla registered 12,709 units in March compared to just 2,314 units in February. And what's even more amazing is that overall auto sales in China plunged 43.4% in March as the global issue took hold. But despite this, when the industry as a whole is dropping, Tesla stands out of the crowd and is experiencing some incredible growth. And guys, keep in mind that Tesla only sells a couple of variants of the Model 3 in China right now. So when they do mass production of the Model Y, when that's released, we're going to see some massive growth once again from this segment of the market. So this is all clearly very positive news around the company. And as you may know, Tesla is also building a Giga Factory in Berlin. And this factory will help them service the European market and make Tesla more available and affordable in that geography. So once we see Tesla sales in China start to stabilize over the next year or two, we will get another surge of sales, in my opinion, from Europe. And this is smart of Tesla to do in this kind of staggered approach. It keeps their demand going, it keeps investors excited for the next steps, and it just shows that consumers really want Tesla all over the world. Now, this Tesla Giga Factory in Berlin is going to have the world's most advanced paint shop, which is going to be unique to this factory. And yes, while this is just paint, according to what Musk is telling us, this would actually be pretty cool. The factory would carry out multi-layer paint coatings. You can see dimension and then a change in color with curvature around the vehicle. And the end result would pretty much be like a 3D feel with the paint. So it'll make Tesla stand out even more than they already do on the roads. Musk never fails to throw out bits and pieces of information of something new that they're working on. And this is actually another reason why I absolutely love following this stock and investing in this company. Now, love him or hate him, Musk has set this company up, Tesla, to be one of the most successful companies in the future, in my opinion. We're seeing some extremely strong revenue growth of the company that should continue accelerating as these Giga plants open up all over the world, making it much more accessible to people that are local to that region to purchase a brand new Tesla. And yes, while Tesla still keeps losing money technically, they keep reinvesting in the business, and future estimates really predict that they will be profitable for a full year very soon. 2020 would have been the year that they saw profitability, but with the global issue right now affecting the whole world, we may be set back another year or two. Either way though, I still strongly believe that this is coming, and it's coming soon. The company is also in very strong financials right now, with a lot of cash on their balance sheet to cover any short-term obligations, so any chance of bankruptcy or fear of bankruptcy is pretty much out the door. We can also clearly see that despite the global issue, markets like China have already started picking up sales once again, and we may see something similar in North America and Europe as well once those regions open back up for business. Nonetheless, if Tesla struggles with sales this year, their balance sheet shows that they are still in good standing for now. So I think there's a lot here that we covered that can help Tesla really propel itself and drive the share price to well over $1,000 per share. All this positive news, all of this Wall Street money coming into the stock, all these institutions finally buying into the stock is going to help drive a lot of demand in Tesla shares. But the question, of course, is did I buy any Tesla shares recently, and am I planning to buy any more at current prices of, say, $750 per share? So the first part of the question, did I buy any shares recently? No, I did not. I still hold my shares that I bought in 2019, and I plan to do so for a very long time. Now, am I planning to buy any more shares at these prices? The answer to that as well is a no. However, if we do see prices drop back to, say, below 400, ideally below 300, then I may actually add a bit more to my Tesla position here. And I know we saw those prices back in March, but at the time I was focused on building my positions in other premium brands. So now that I got a lot of those built out to a position size that I'm happy with, I wouldn't mind adding a bit more to Tesla if it dropped to those prices. Now, quite honestly, I don't know if we're ever going to see those prices again in Tesla stock, but considering how volatile this stock is, especially when compared to the rest of the market, it's quite possible that we get close to those levels, even if it's a very brief dip. So I'll be keeping a close eye on the stock here and have my cash ready just in case that opportunity presents itself again. Guys, either way, let me know if you continued holding your Tesla stock through this whole volatility run we've seen in the last month or two. And let me know, of course, if you bought more shares of Tesla and what your price target is for this stock by the end of 2020. I'd love to hear your thoughts in the comment section down below. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.